Hello, and welcome to Virtually Well. My name is Holly Sexton with Abound Credit Union, and Virtually Well is a partnership with Baptist Health Hardin. Chuck Eads, Chief Lending Officer at Abound, is back to share some information with us today to help put money back in your pocket. So Chuck, let's start with your experience.
Yeah, sure. Thanks, Holly. And thanks for the introduction. Like Holly said, I'm the Chief Lending Officer here at Abound Credit Union. Holly, I've been involved with the mortgage industry for 20 plus years and have certainly bought and sold several homes over the years. As far as the least known action, I would say it would just be curb appeal. And when I say that, I don't just mean how the home looks from the outside. That is important, but also how turnkey is it on the inside? New carpeting, fresh paint, those sorts of things can certainly do a lot to support your purchase price that you're asking. Potential buyers tend to quickly assess how much they will need to do to the home in order for them to be happy with it and kind of make it their own. So if the answer to that is a lot, then you may receive poor offers on your home.
That's a good tip for helping maximize profit. So let's talk about taxes. In some cases, the IRS may require a capital gains tax on real estate.
Yeah, that's right. So again, the IRS capital gains, and that is shown on Schedule D of your personal tax returns, is basically the difference between what you pay for a home and what you sell it for, right? Capital gains taxes can apply to investments such as stocks or bonds, cars, boats, anything that you sell and typically make more on it than you bought it for. And so the IRS typically does have some exemptions or allowances here. That'll run about $250,000 of capital gains on real estate if you're single, $500,000 if you're filing jointly. Now, I would add some detail to that, and I also preface this by saying that I'm not a tax expert, so you might want to consult a CPA or a tax expert for your specific situation. But generally, that exemption applies if the home is your primary residence and you sell it, and you lived in it for more than a year. I would also say if the home was a home that you rented to others or you bought it, you fixed it up and you flipped it, then the capital gains would likely apply. So I would also say that your online tax programs like TurboTax and H&R Block Online, your mid-level versions of that, not your basic free versions, but you may have to upgrade. Those mid-level versions of that tax software usually do a pretty good job of stepping you through this process, asking you questions about occupancy, timing, purchase price, selling price, et cetera. So to give an example real quick, you purchased a home, let's say in 2019 for $100,000 and you sold it in 2021 for $150,000. That's an increase of $50,000. So you may also be able to deduct any expenses tied to improving the property. Let's say you put $5,000 for new carpeting and paint, or expenses tied to selling the property, like 6% of the selling price if you use a realtor. So that would be around $9,000 in this case. So in that case, then your net selling price would be, $150,000 less $9,000 realtor expenses, less $5,000 that you put into it, so $136,000. So in that example, your tax liability would be around $36,000 in gains, right? So not just the difference, but there's some things you can write off some of those expenses. So again, if it was your primary residence, then the previously mentioned exemptions would apply. And again, if the property was a rental or investment property, your tax liability would be, again, that $36,000. I would also say that recommend contacting a local realtor to determine the correct market price of your home. What homes like yours are going for now. Regardless of whether it's your primary residence or an investment, as a seller, you pay for this service. It comes out of your net proceeds at closing. But it's tempting to forego a realtor because of those fees. But I would also say that pricing your home over market generally doesn't pan out, since most real estate purchase agreements provide the buyer with an option to cancel the transaction if the home doesn't appraise for the purchase price. That, along with the possibility of deducting those realtor fees as a cost of selling, definitely makes using a realtor a smart choice.
Thanks so much, Chuck. This topic goes much more in depth. So what's the best way for viewers to contact the lending team at Abound?
Well, of course, our branch staff or mortgage team can assist you with getting a loan and other general information about buying or refinancing. But again, I would say your best resource around taxes would be a local CPA or tax advisory service. This information that we're talking about here is just intended as a general understanding for folks, and really shouldn't be considered as tax advice, right? Again, you would definitely want to consult an expert on that.
Well, thank you, Chuck, for sharing helpful tips. And thank you so much, viewers, for watching. Please share this video and subscribe to Abound's YouTube channel for quick ways to put more money back in your pocket. Also, you can see Virtually Well videos and events by following Baptist Health Hardin and Abound Credit Union on social media and visiting aboundcu.com. We'll see you next time.